All right, welcome in everyone. With fourth quarter earnings in the books, ended a couple weeks ago. Things have been a little bit slow on the news front, lack of ability to do some newsworthy content. I thought we would dive into some pipelines that I think are really confusing, and I know over my time as an analyst, I've spent a ton of time trying to figure out. And they do link to the news a little bit. So the systems that we're talking about here today, and I think I'll envision a three-part series on this, are ones that have had some open seasons, and then have some potential to have some competitive dynamics with some other pipelines that I think are interesting going forward. So yeah, just some housekeeping before we get started. We are accepting anyone who wants to use the tool that I'm going to be showing to do beta testing for us. We're releasing new pipelines every week. I think I said my goal was 20 per week. I think we're a little bit behind that, but I have a bunch to release this week. Please reach out to us, matthew.lewis@plainview-energy.com. I can be reached there. If you have questions, if you want to see certain pipes, if you want to see certain features on our tool, we're trying to tailor this to what people want to see. So please reach out to us. And like I said, we'll dive into this. I think this will be probably a three-part series, hopefully release within the next week or two, all the parts. But this will be part one. And we'll dive into a system, like I said, and then the part two system will be a system as well that's a little bit confusing, a little bit where there aren't a lot of public disclosures, so it makes things tough. So let's dive in here. Switch to the map here. And so what we're going to talk about will be, for part one, will be the Bridger pipeline system. So this is a system owned by True Companies, and this is moving oil from really the Bakken area up here, and also down. It has gathering arms in the Powder River Basin. So what you see here, what I've highlighted here, and what I'm showing here, are the trunk lines. What I consider the supply trunk lines up here in the Bakken. You have the transport segments right here, and then you have what I call the market segments that get your oil down to markets where they can be transported to, markets that are the bigger hubs that they can be transported to eventual refineries. So this is how the system looks today. And like I said, it's moving oil from the Bakken area up here, from the Powder River area here, down primarily to Guernsey here, where it can get on other pipelines and then eventually go to Cushing. So I'll just quickly show, I'm just showing the trunk lines. We do separate those out for our map. And then if I add in the gathering lines, you can see the gathering lines here. I suspect they have more gathering lines in Montana, but I've been unable to find a map that shows those well enough for me to map those out. So keep in mind, they probably have some more gathering pipelines up there in Montana. But for now, we'll focus on the gathering piece, or the transport piece. I think that's the more interesting piece of this. Something I'd like to mention, the second part of this series, we'll be talking about Pony Express Pipeline, it connects into Bridger. So I'll just bring that up really quick so you can see that. And that's what's carrying a lot of this oil. The Bridger moves down to Guernsey. A lot of it is getting on Pony Express, and they do have a joint tariff. Something that's gone under the radar, in my opinion. In 2021, Bridger and Pony Express formed a joint venture where the Pony Express assets were actually contributed to a JV called Liberty Express Pipeline. And Bridger does own 25% common equity interest in those assets now. So it makes sense why we're going to be talking about this in a three-part series, with part one being Bridger, part two being Pony, and then potentially talk about where they sit in the competitive landscape, and can they compete with the likes of like the monster coming out of the Bakken, which is Dakota Access Pipeline. I think that's the story that we are going to tell over this three-part series. Is let's do a deep dive on Bridger in part one. Part two, let's do a deep dive on Pony Express. And then part three, we can talk about the competitive dynamics of what Bridger has to offer versus DAPL's offering, or Dakota Access offering, which is the big pipe out of the basin. To go back to the JV, I haven't heard a lot of people talk about this. I think it's pretty interesting that they've tied these two systems together. I would imagine that's for competitive purposes. So again, Bridger, based on the disclosures that I see, owns 25% of the Pony assets, the common equity interest. If you look at some of the credit notes and the credit rating agencies, they have indicated that I think Prairie Acquisition is the company that owns all of Tallgrass's and Pony assets. They still own 100% interest in a preferred equity stake, which gives them the rights to essentially all of the cash flows for that. And there is an option for Bridger to purchase a 25% preferred equity stake in fiscal 2024. So I don't know when their fiscal years officially end or begin. So that might have already been done. I imagine we'll get some color on if that actually happened over the next couple weeks or over the next month when we get some more disclosures to come in. But again, these systems are tied together via a joint venture at this point, with an option for Bridger to buy a 25% preferred interest in the Pony assets. And that's according to some of the, I think S&P did a credit note on that, on Prairie Acquisition's credit. So we'll flip off Pony here, turn that off really quick, and we'll go to, I have Bridger up, but let me just type that back in. I think a good way to tell this story is to kind of go back in time and look at what Bridger looked like before the Bakken blew up, and then we'll move forward through time on this deep dive to show you what expansions they did on the pipeline and where there's maybe potential for them to push some more barrels down this pipeline in the future. I do think they do have the ability to potentially do that. I guess to just level set, it might be useful to just click on the actual flows here. We can see the quarterly flows here. We have the nameplate capacity of this pipe really at this point at about 270,000 barrels a day, and I'll go into those capacities here in a minute. But as you can see, there has been historically space through this pipeline. And something I want to hit on in this video is even if you look at pre-Dakota Access, so when Dakota Access wasn't online, the nameplate capacity of this line here was about 270,000 barrels a day. But they didn't ship all those, they weren't full. Even when the Bakken was starving for pipeline capacity and brailing a ton of barrels, they didn't actually fill the pipeline back then. And there's a variety of reasons for that, and we'll go into those, the reasons I suspect that is. So we'll close that out. And to go back in time, I'm just going to click off some of the segments that they have built and expanded over the course of time. So what you see now, and you can ignore the dots for now, and again, to level set people, green dots are receipt points, red dots are delivery points, and the orangish yellow dots are mixed, so they could receive and deliver. But this is what the pipeline looked like before really the Bakken really blew up in the early 2010s and really started pumping out a lot of oil and needed more pipeline capacity. So I'm going to turn on my drawing unit here. We'll start up here in what I call the supply segments of the pipe. And again, we're back in 2011. This is what the pipeline looked like in 2011. You had capacity here coming from eastern Montana into the Baker. They have a big sandstone Baker terminal here, is what they call that. And this is known as the Poplar system, and this had the capacity of around 50,000 barrels a day. They also had this Four Bear system here, so this had a capacity of about 80,000 barrels a day going into Baker. Now, this may seem strange, knowing what we know about the Bakken and knowing how the pipes flow out of the Bakken today, but back in 2010, this pipe actually flowed northward. So you had barrels being taken from this eastern Montana area and then coming up into the Alexander terminal here, where they would get on Enbridge's pipeline to eventually make their way over to Clearbrook, Minnesota, and then down into the Midwest refineries. So this is what the pipe looked like back then from a supply segment standpoint. If we move down the line, this is what I have deemed the transport segment. And this is just one pipeline back in 2010, 2011. This is Butte Pipeline, and Butte Pipeline took you all the way to Guernsey. So you had, let's call it 50,000 barrels a day, and I'll summarize these capacities at the end via a PowerPoint slide, which will make things a lot easier. So don't worry about memorizing these, and I'll gloss over some of these capacities and the expansion size that they did, but we will sum them up at the end. So 50,000 a day coming from Poplar into Baker, 80,000 coming in from Four Bears into Baker. That's 130,000 combined. You had 150 coming out of Baker down to Guernsey via Butte pipeline. So this system now all combined into one. This is known as the Bridger system, but you may hear me reference segments or pipelines separately. So Butte was its own pipeline, but now it's a part of Bridger. So between the two of those, you had 130,000 coming down into Baker. You probably had some local production. You do have a supply lateral into South Dakota that's pulling some up. So let's say 140 to 150,000 barrels a day of egress capacity back in 2010 that could get down to Guernsey. Let me clear this out. So if we fast forward to some of the expansions that they did, so between 2012 and 2015, they expanded some of these lines. They added new lines. So if we fast forward and now we're in 2015, what's different? Well, they beefed this up to, I know they planned to do 80,000 barrels a day. I don't know if they actually did this, but that was the plan, was to beef Poplar up to 80,000 barrels a day. They plan to beef this up to, I believe, 120,000 barrels a day of Four Bears. And then they expanded this line as well and reversed this line. So remember, this line was going north. They reversed this line and now have it going south. So you've expanded the capacity of these supply lines, and we'll get into the specific numbers on the PowerPoint slide I do at the end here. But what else did they do? So they also built, let's take a look. They also built a Thunderbird system. So they built a new line down from Baker. They reversed a line here to get some capacity into, this is the Reno terminal, where it can go down to Casper and get on some pipelines at the Reno terminal. It can get on a Plains pipeline and go down to Casper. There's a refinery here, and there's also other outlets here it can go to. But really the big thing that they did on the supply side, or on the supply and transport side, they beefed these up, and then they added a new line from Baker down to Alzada terminal here, and then all the way down to they added some capacity here to get it down to this Donkey Creek station. So the new pipeline, the new supply expansions, plus the new pipeline that they laid here, and then they did some downstream stuff as well to beef that capacity up. So by the time 2015 hit, I have their capacity at about 270,000 barrels a day on this transport piece, and that's the capacity that you see still listed here today. They have done things since 2015, and we'll go into those next. But just to reiterate, the capacity that you see here is essentially the same as it was in 2015. Now, is it possible they added pumps to that new pipeline that they laid here, and it's actually higher than 270 now? Yeah, that's possible. I haven't seen any disclosures to say that they're doing that, and they're certainly not moving that much oil. They're not moving over 270,000 barrels a day of oil through this line. So let me go back and we'll turn on my draw tool again. So what else did they do? So pre-COVID in 2019, they actually sanctioned a new project, two new projects actually. One is called Equality Pipeline, and I'll show you what that looks like here. So I know it's hard to see, but if I click on and off of this map, you should be able to see a line that shows up here. It's close to a twin of Butte, but it only starts at Hewlett Station, which is here, and comes all the way down to Guernsey. So you have a new pipeline that was laid from Hewlett here down to Guernsey. So that was planned and built really during COVID. So they announced both this pipeline and another pipeline called South Bend. So I'll put that one on there, and I know that one's hard to see as well, but you can see that here. So this was, and I'll turn on this crossover too. I think they built that at some point between 2015 and 2022. But South Bend really came from the Bakken production areas, and is a twin of this line down to Baker. So again, in 2015, we had 270,000 barrels a day of capacity on this transport line. What Bridger did is they didn't, as far as I can tell, they didn't build anything here, but they did beef up the supply segment here by building South Bend, a new pipeline, and they built up what I deem the market segment here via equality. So they built the pipeline from Hewlett down to Guernsey for equality. So that's essentially, I think I have everything checked now. That's what the pipeline looks like today. What does this mean for the pipeline? Well, what's interesting in the pipeline is I still think that there's a bottleneck here on the transport piece. Now they've beefed these up significantly, these supply segments and the demand segments. So I'm going to switch us to the PowerPoint really quick, and we'll go into that, and I'll explain the specific capacities here. All right. So as you can see on the slide, it's the picture of what we just looked at on the tool. And I show the capacities through time on this slide. So this is just the supply segments. So you have Poplar here, which went from, let's call it 50,000 barrels a day to 80,000 barrels a day was what the estimate was. And something to think about here is why, if they had 280,000 barrels a day of capacity, why did this pipeline not flow full? You're probably supply constrained up here in eastern Montana. So most of the Bakken production happens over here in North Dakota. And if you actually look at some of the flow data today, it appears to me that Bridger only moves on Poplar about 10 to 20,000 barrels a day of oil. So even though this capacity, and this is something to keep in mind, the capacity is a nameplate capacity on Poplar of 80,000 barrels a day, its effective capacity is well lower than that. So probably somewhere around 15,000 barrels a day of effective capacity. So today, as we're looking at things today, you see the nameplate capacity of 385,000 from these supply lines. It's certainly quite a bit lower than that because Poplar doesn't have enough supply up here to actually fill the 80,000 barrels a day. So the effective capacity is probably somewhere around, let's call it 320,000 barrels a day. The other thing to think about from this supply standpoint is South Bend. South Bend was built for 105,000 barrels a day of capacity, but it can be expanded to 250,000 barrels a day with just 2 pump stations. So they could beef up this capacity, let's say another 150,000 barrels a day, subtract out what Poplar is constrained, you'd be close to 500,000 barrels a day, probably a little bit under 500,000 barrels a day, 500,000 barrels a day of effective capacity into Baker Station here. So that's a lot. That's certainly more than what they've been moving in the past. And it's something to think about from the competitive dynamics of this pipeline going forward. If they choose to compete for barrels on price, are they able to steal some of those away? I know most of the market knows and understands, it's been widely reported by Kinder. Kinder is shutting down their Double H pipeline, which runs a similar route to Guernsey. Some of those barrels may be able to be taken by Bridger. I know a lot of people have slated those to end up going to Dakota Access, and Dakota Access may get some of those barrels, but they'll have to compete for them. So this 3-part series is what we're going to talk about on the competition between those two. So again, Poplar is supply constrained. South Bend could pump a lot more, up to 250,000 barrels a day via public disclosures that they've made. With 2 pump stations. So potentially almost 500,000 barrels a day into Baker. If we talk about the next piece of this, it's the transport segments, sorry. And the transport segments, as you can see, to my knowledge, it's possible they added pump stations to one of these lines and beefed them up a little bit, but I think we're still at around 270,000 barrels a day of capacity, and that's between Baker and really Hewitt Station here. So this piece you would need some sort of an expansion. I mean, again, we could have, with pump stations, up to 500,000 barrels a day pushed into Baker here. You don't have the capacity to take all that, so they would have to find a way to expand these lines or lay a new line, which is something they could do. Obviously, that would cost money, so they would have to think about the economics of that. But this is a bottleneck that could be loosened via pump stations or new pipe, where you could move quite a bit more oil down this line. Let's go to the market segments. So I mentioned it earlier, the market segments, they move, most of the oil ends up going to Guernsey down here. A little bit goes to Reno here. So that's about 20,000 barrels a day if you look at the capacity. I mentioned Equality getting built in 2020. I don't think I mentioned before, but South Bend was actually was put on pause during COVID, and then eventually completed in 2022 or 2023. But Equality was done during COVID. So things to think about from the market segment side of things is we're thinking about things from what can the Bakken push down this pipeline. But you also have to remember that these pipelines are likely transporting some Powder River Basin barrels as well. Based on the flow data I look at, that's likely to be 70 to 90,000 barrels a day. So when you're looking at this capacity, you have to remember that some of this capacity is probably going to be slated or tied to Powder River barrels that need to go down these pipelines. So let's call it 70,000 barrels a day of Powder River barrels. So you would have a nameplate and effective capacity of about 400,000 barrels a day to market on these market segment pipelines is what I call them. So again, let's zoom back out and think about this. You could have close to 500,000 barrels a day of supply push coming into Baker. You would need to do, I think you need to do an expansion here if you want to bring those kind of barrels down. But you could do, with the expansion of South Bend with the pumps, you would need to do an expansion here. But you do have about, if we subtract out the Powder River barrels, probably 400,000 barrels a day of room for Bakken pipe to come down this market segment. So again, to back up, if you think about what the flows look like on this pipeline, the flows were not close to 275,000 barrels a day. You're slightly over 200 at this point in time. So I'll escape out of this. And we'll just go look at the flows again really quick. So 222,000 barrels a day. I think this pipe, with some capital, certainly that transport piece, could do up to 400,000 barrels a day. So that's an interesting thing to think about when we're thinking about where the Double H barrel is going to go when Double H goes offline. Does Bridger want to try to compete for barrels with Dakota Access? Dakota Access has 5, 7, and 10-year contracts. That pipeline came online in 2017, so presumably the 5s and 7s have rolled already. You probably have a lot of 10-year contracts. Does Bridger make a play for some of those barrels? Those are things to think about. And if Bridger does make a play, what do those rates look like? What do the netbacks look like? What does that mean for Dakota Access? Does Dakota Access have to potentially drop some of their rates? That's what we're going to investigate in the next 2 series going forward. So the next part of this will be looking at Pony Express, the pipeline that Bridger dumps into, and we'll look at some of the dynamics on that, some of the capital that they spent on that. Certainly they've put some capital into that pipeline, debottlenecking a lot of areas. So we'll talk about that in the next part, the next series. Thanks again for joining us, and reach out if you have any questions. Again, matthew.lewis@plainview-energy.com is the email. Feel free to reach out anytime. Thanks again.